Hey everyone, and thanks for jumping back into the real estate verse. Today, we're going to talk about real estate and go through a lot of different charts to provide a general outlook on the real estate market. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as Ed Leamer famously said, housing is the business cycle. Now, in this video, what we're simply going to do is go look at a lot of different charts, look at the monthly changes or quarterly changes going on within the real estate market for a few different metrics and try to gauge where the real estate market is. So we're going to start this off by looking at the Zillow Home Value Index. All right. And what you'll notice is that you see a fairly clear peak back over here in 2006 and 2007, and then it's been a long time going down. And this is something that, if you follow this channel and you're only used to crypto or even you're only used to stocks, the real estate market can go at a snail's pace. Bear markets in the real estate market can last a long time, and bull markets can last a really long time. The bear market back over here during the financial crisis lasted years and arguably bottomed many years after the downturn actually began. If we look at this in a different way, first of all, you can sort of see it's reaching a potential plateau up here. If you look at a monthly change, it might show it in a slightly different way. So looking at a monthly change of this metric shows us that when the real estate market sees a major downturn, it's typically not good for risk assets. Okay. What you'll also notice is that going back to the regular view on the so if you're just looking at the Zillow Home Value Index, not looking at the monthly change, while this continued to go down well past the bottom of the S&P 500, you'll notice that once the monthly change was starting to get better, then the stock market had a better outlook. Despite the fact that the real estate market continued to sort of tumble for a while, because it wasn't tumbling quite as bad, the stock market arguably bottomed before and then sort of slowly recovered out of it. Where are we today, right? I'm going to switch this over to a percentage so we can actually sort of normalize it a little bit better. Right now, this percentage change on a monthly basis is right around zero. Okay? Right around zero. Back over here, we also fell below zero. We also fell below zero over here as well. One of the things that I notice about the real estate market is that when the real estate market takes a major downturn, it tends to correspond to negative effects in risk assets. But just because you have negative movements in risk assets does not always mean that the real estate market is doing poorly. So it's one of those things, again, like if A, then B. But if B, it doesn't necessarily mean A, right? Just because the real estate market or just because the stock market's going down doesn't mean that the real estate market is. But if the real estate market is going down in a sustained way and it's getting worse as a function of time, it typically doesn't have the best effects on risk assets. And for that reason, it's always useful to try to understand where are we currently. Well, you can see, again, the monthly change has been moving down quite quickly, at least with regards to the Zillow Home Value Index. Now, it's nowhere near these levels down here, but this is something that we're going to want to keep an eye on. It certainly has pulled back quite a bit. If you look at anecdotes from various regions, at least in the United States, it does seem like there's at least some activity going on right now, at least in the early part of the year, more so than I think a lot of people were expecting. I think the big question is does that demand sustain itself for very long, or does it ultimately sort of wither away as we get further into the year? Note that, the Federal Reserve, that's one of the biggest questions right now. How high are they going to raise interest rates? Will they go all the way to 5%? Will they go beyond it? And ultimately, what effect will the terminal rate eventually have on mortgage rates, and how high will those eventually go? Or how low will they stay? At 6% or so, which I believe is what they're currently at, despite that, there actually is still some activity going on. Now, if you look at the percent difference, it was coming down quite quickly for, basically from April of 2022 until September, but it has slowed down a little bit. Note that it also slowed down a little bit over here back in 2007. So the question is right, well, what comes next? What comes next in this metric? Now, something else that I want to look at And we're going to go through, through a lot of different things. And perhaps we'll first look at mortgage rates just so we get an idea of where that is. You can see that mortgage rates have climbed quite quickly just over the last year and a half, right? So, I mean, not too long ago, you could find, a lot of people were getting mortgages for less than 3%. Now that just seems like a dream. And now we're all the way back at 6% in mortgage rates. Now, that might sound absurd to a lot of people, but, it's funny, like whenever I talk to, to my parents or anything like that, 6% would have been seen as incredibly cheap, back in the 1980s. I mean, you're talking about mortgages that were at like 14, 15%. Over here, back in 81, 18%. I mean, imagine these people that were buying a home back then at an 18% mortgage rate or a 14% mortgage rate, hearing the people today complain about 6%, right? It just shows you the recency bias of everyone getting addicted to cheap money and a lot of leverage, and then ultimately not liking it when it goes up in any sustained way. We were at these rates back in 2008. Okay, so I mean, you have to go back all the way to 2008 to essentially find rates that are on the same level as where we are today. Now, I also want to talk about a few other things. So there's the sales price of houses sold, and you can see that has also sort of come up here to a potential plateau. More importantly, let's take a look at the quarterly change and then compare it to all of the prior recessions. One of the things you'll notice with prior recessions is the monthly change goes below zero. But again, just because it goes below zero does not always mean a recession. So again, it's one of those things, right? If you have a recession, it can typically correspond to the housing market not doing well, but just because you see a monthly change below zero doesn't necessarily mean anything. But if we switch this over to a percentage and take, say, like a 3-month moving average, or sorry, a 3-quarter moving average, it can help clean up the data a little bit, right? And you'll notice that we had a recession back over here in the 70s. We came well below zero. Stock market sold off into that. Again, in the 80s, twice in the 80s, it came below zero on a 3-quarter rolling average, right? A simple moving average. Again, you'll see it over here in the 1990s and so on and so forth, going throughout history. Every time it does go below, it doesn't necessarily correspond to a recession, but oftentimes, majority of the time, a recession can easily correspond to negative movement in the real estate market. And this is one of those reasons why the saying, you'll often hear the saying, like, housing is the business cycle. It's because there's so much wealth tied into the real estate market. And, I think a lot of people sort of, have a lot of value in the equity of their homes. And if that value is deteriorating, then I think there's some element of the wealth effect taking place. If people don't feel like it's worth as much, they might cut their spending. If they feel like what they have is worth a ton, they might be more likely to spend on things just because of the wealth effect. But again, there's this instance over here, right, in the 70s that we had a recession, but the real estate market wasn't necessarily all the way back down below zero. I mean, it was coming down quite quickly, but the 3-quarter SMA of it did not actually go back below zero. So where is it today, right? I mean, if you look at it right now, it still is pretty high. I mean, it's all the way up here. The 3-quarter simple moving average shows that it's at 2.56%. So still well above zero. It is moving down. Again, it's one of those things that we need to keep an eye on, because if it goes well below zero, like we've seen in the past, it's typically not a good thing. Okay, a lot of people talk about, will we have a recession? Will we not? And, I think people are placing their bets. We've talked about all the different, elements that go into a recession, the unemployment rate. We've looked at the smooth recession probability indicator, the SOM rule recession indicator. We've looked at a lot of different things, and the housing market is just one more thing that I think you can look at. So it is going in the wrong direction for the U.S. economy. Of course, it's going in the right direction for, at least trying to curtail the effects of inflation. But we have to ultimately see how this plays out. But again, it's an interesting metric to sort of get a gauge on where the real estate market is. We can also look at new single-family homes sold, all right, and see what is that doing. And again, what we're going to do is, again, I think always looking at the derivative is better than just simply looking at the raw data. Because oftentimes the market doesn't care if something's going up or down. It cares more so on the derivative, right? And again, that goes back to the first chart we looked at, right? Just to remind you, if you go back to the first chart, the house pricing the house price indices, the Zillow Home Value Index. Remember, if you waited for this to bottom, what way of a year in 2012? I mean, the bottom of the stock market would have occurred like 3 years earlier. But look at the monthly change. Look where that bottomed. It bottomed in August of 2008. It slowly started to get better. And then I think once investors were a little bit more confident that the real estate market was not, it wasn't continuing to accelerate in the wrong direction, we slowly came out of that. Okay. So just something to consider when when you're thinking about these metrics. It's not always the raw data of the metric. It's oftentimes the derivative that actually can make an interesting impact on how people are feeling in terms of how they want to manage their investments. This again, new single family homes sold. Look at the monthly change. Take the percentage. Take say a 3-month rolling, a 3-month moving average. Might not even be. That actually is somewhat messy still. Perhaps we need to change it to a 7-month. And here again, I mean, these recessions can easily correspond to pretty large downturns in the real estate market in terms of new single-family homes sold. And recently it's been trending down. It has been trending down for a while. So far, at least if you look at over the last few months, it hasn't been getting as bad, and that's why I was mentioning anecdotally. I think at least the beginning phases or the early stages of where we are, there has been a little bit of a surge back. Where that is, where we are at the end of the year, after you get through the initial surge of investors that have decided they want to buy, I don't know, and I don't know exactly where the Fed's going to stop raising. Of course, it seems like 5% is what a lot of people are thinking, and I think there's there certainly is some credibility to that. If you look at this one's interesting. So this one, the amount of months to sell a new home, I think is something that it should not go overlooked. And this is an element that you have to take into consideration as well. While it might seem like the real estate market has deteriorated a ton and it's extremely bad, in the context of history, it's only on average taking 2 months to sell a new home as of December. Has it ever been like that? I mean, look at going into the financial crisis. It was at 3.5 months. Right now we're at we actually went all the way down to 1.5 or so. So it's not always black and white is the point I'm trying to make, right? There's a demand side of things where people are likely going to not buy as freely as they would have when cash was cheap, but there's also the other side of the equation, and that's the supply side of things. And one of the issues I think is that the supply side has not been super high, and therefore, while demand isn't nearly as high as it was because there's still limited supply, you aren't really seeing a huge change yet. Now, one thing to consider though is if the Fed is successful in their goal of reducing or raising the unemployment rate, which they've said they want to do. I mean, they've said that they want to raise the unemployment rate to that sort of like that 4 to 5%, maybe like 4 to 5% level or so, so that they can loosen up if they loosen up the labor market, it can help take off some of the upward pressure of wage inflation. If people are out of jobs, it's probably going to negatively affect the housing market, right? So I would expect this to go up, but again, it has a long way to go up before it's anywhere close to what we've experienced in the past, because we're so far down here. And again, I think a huge part of that, two things. There was a huge demand because of cheap capital, and we've also just had very limited supply. And one of the reasons we've had limited supply, arguably, is because a lot of people who might want to move don't want to move because they would realize that they would actually have to get a much higher interest rate, a much higher mortgage rate, simply because the mortgage rates are much higher now. So they might feel like they're kind of locked into what they have. And that could be contributing to the relatively low supply of the houses on the market, and therefore the relatively short amount of time on average that it's taking for houses to sell, simply because there just isn't a ton of inventory at the moment. But in a couple of years, right, there could be a lot of inventory. And remember, the housing market takes a long time to play out, right? It does not play out in a year. It takes place over multiple years, right? And then, maybe a few other things, right? The housing units started. This is another interesting indicator to look at. So again, if you look at where recessions occurred, you can see it occurs in where housing units started are going down quite quickly. Exhibit A in the 70s, Exhibit B, 75 or so, and then in 80, and then in 1981, and then in 1990. This one didn't correspond to one, but the next one did in 2009. And even over here in 2020, right, it came down fairly quickly, fairly short recession, right? The Fed printed our way out of it, not a luxury we necessarily have this time because inflation remains high. This is not going in the right direction, right? It's going in the direction that typically corresponds to a recession. Now, does it always? No. Look over here in the 1960s. You can see we had a pretty sharp downturn. And technically speaking, I guess it wasn't a recession, but also technically speaking, the stock market still went down, So this is something else that I again, like the housing, as a lot of people say, right? The housing market is the business cycle. If the housing market falls considerably, it's likely going to have an effect on risk assets. But just because risk assets fall doesn't always mean the real estate market's falling. So that's something we always have to keep in mind, is that the real estate market is a huge market, absolutely enormous especially compared to, what we typically talk about on the channel, which is cryptocurrency. But we must understand that things like real estate can affect risk assets in general, equities, cryptocurrencies, whatever. It can have severe effects on this stuff. So right now, you can see this is actually rolling back in sort of the downward direction. If we apply, let's say, a 3-month moving average to it, this is what it looks like. And so another thing we're going to have to watch. I mean, we don't talk about real estate much on the channel, but perhaps we should talk about it more because, again, it is a pretty good indicator of where the economy is headed, especially if this continues. If you look at the monthly change and switch this over to a percentage, and unfortunately, it's still quite noisy, so you might have to take like a 7-month moving average. But again, you can see that recessions correspond to U.S. privately owned housing units started also sort of being down here in the negative when you look at the rate of change of it, so the derivative of it, not just the raw data. And I'm trying to think if there's anything else I'd want to look at. Maybe the home ownership rate could be something interesting to take a look at. Right now, or at least as of, this is actually kind of outdated here. We only have data going through July, so perhaps that one won't be as interesting just because we don't have the data to fully look back on. But again, I mean, we've looked at a few charts here. Hopefully it's insightful. Here is furniture and home furnishing sales, which again is very seasonal, as you can imagine. As you get into the early part of the year, again, this is why as you get into the spring, everyone, you'll see a lot of houses come onto the market, and of course the furniture and home furnishing sales tend to spike, as you get into that phase, right? Like December timeframe going into that area. Let's look at a monthly change of this, maybe apply a moving average or something to see if there's anything interesting going on. You can see over here, at least in the financial crisis, it spent a lot of the time below zero. Right now, it's actually not looking so bad. Okay, so a lot of different charts, a lot to digest. Let me know if you guys like the content. If you do, maybe we'll talk about real estate more. But either way, make sure you subscribe. If you're not subscribed, give the video a thumbs up. We also do have Into the Cryptoverse Premium at intothecryptoverse.com, which I know it's called Into the Cryptoverse, but we actually have a ton of different charts, macro charts, real estate charts, stuff for equities, mostly cryptocurrencies, but we are continuing to build it out. Several different tiers available, including a free one. So make sure you check that out down in the description below. Thank you guys for tuning in. Subscribe again. Give the video a thumbs up. I'll see you guys next time. Bye.